sound means we are now live here on our YouTube channel, Tackle Trading's Halftime Report, our show that we bring to you guys each and every day, where we look at the stock market one step at a time, charts, news, information, economics, commodities, currencies, pretty much anything grabbing our attention. We analyze it, hopefully have some fun while we're doing it, and give you guys some value into your own personal daily routine out there. As you pop it into our channel, as always, hashtag Team Tackle right in the chat. Appreciate the community and the conversations that go on over there. They're a lot of fun to kind of track and watch you guys engage each other. As always, positivity. A couple things on today's show. We're going to have some fun breaking these down. Number one, we've got technicals. We've got a market actually been very bullish post-election. It continues to rally. The Dow is up again here today. Small caps are up again today. The NASDAQ is up. We're starting the Monday morning here again on a bullish note. We'll break it down. We'll look at it technically. And then from a news perspective, we had more vaccine-related trial news coming out, very positive from Moderna, another vaccine candidate that's been in the works. We'll talk about that, what it means, not only for the company, but for the market and some of the themes that have been developing. We'll do a sector roundup and kind of take a look at the different areas that are performing better or worse relative against the market. And then more on earnings, just kind of a recap. I mean, we're here mid-November and mostly through the earnings season. Most of the S&P 500 companies have reported. This week, we've got some retail names. We'll talk a little bit about that, foreshadowing what we're expecting through the week. But pretty much we're here to just have a good time and break things down one step at a time. We've got the regular here, Matt, Mark, myself, Cody on the back end producing. Matt, how you doing on a Monday morning, sir?
Tim, I'm doing absolutely fantastic. I'm excited to be hanging out with the halftime crew here today to break down the news this week. And, it's a week that's starting it out on a positive note, obviously. Upward moves in price in most of the market, a little bit of fading action as we get into today's price action. But the market certainly wants to buy, and I don't know if I'm doing as good. No, I'm doing better than the market today. I'm a no sell day. This has some selling action to it, so I'm just momentum based right now. No, it's I'm excited to be here with the crew here today, and I'm excited for the podcast later on today. We're most likely going to be having the great Coach Tyler Craig, to break down his wonderful newsletter that was published at the Trading Justice podcast. Obviously, we do a newsletter on a monthly basis, and so he's going to come on and talk about that with the crew later on today for Trading Justice. So I'm excited about that as well. I'm excited about the fact that we don't have a lot of economic reports this week. We don't have a lot of earnings reports this week. We're getting into post-election analysis, which is always dominant every 4 years. And, to start off the week here this week, I got this market performing very, very, very consistent against the backdrop of what did occur in 16. If you guys will recall, coming back to 16 very quickly. And I know you wanted to ask Mark how he's doing, but I'll just save him, and he's doing fine. He's doing fantastic as well.
Dude, I'm doing better than fine. My account's up, and I beat Tim in fantasy football. I mean, how could I not be doing great?
He is doing absolutely beautiful and fantastic, and I mean, he's just so rosy here today. It's absolutely beautiful. Mark, it is so stinking beautiful to have you be on here with such a positive mentality. I love it. But when you're looking at 16 very quickly here, and let me make sure I'm in the right year very quickly. Just give me 1 second. Oh, I'm going all the way back to 13 there. 14, 15, there we go. Coming into 16 here, right there. If you remember, and we broke this down post-election as well, guys, but if you'll recall following that election, and this is the candle on that election, you had those couple days coming into election where you had that pre-election bounce after the mark was overextended to the downside. You had a massive volatile range here, but once the market did find its footing, it consolidated a little bit, broke out and ran. And so let's take a look at the market, here. And I said this, last week as well. It was very, very, very positive to see the market reaction following the election a couple weeks ago. It got into the overhead areas of resistance, and then we consolidated here. We consolidated, and we talked about this all last week, guys. We want the consolidation. We need the consolidation. Allow the consolidation to happen and wait for that 9 EMA to catch up to it. On Friday morning, we kissed off the 9 EMA. You had to call it confirmation. And then obviously we're breaking above the 3600 barrier. At some point in the future, there will be a future Matt Justice breaking down markets where he's analyzing the S&P at 36,000. But for right now, 3,600. And so in terms of 3,600, we're looking at that as potential confirmation. Now, when you're looking at this on a longer term perspective, you got to be looking at that 3,600 level, and you got to say, okay, man, this could be, we're not seeing the momentum yet. We're seeing a little fade action. Remember, we tested above 36,000 last week on the Pfizer news, came right back down, consolidated through the rest of the week. Now we're up again above 3,600 again on the Moderna news, which, you know, Mark, if you can give us the Moderna news very quickly, well, before I continue breaking down the analysis, just high level Moderna news.
Oh, excuse me.
I got it if you need me, Mark.
No, two Mondays in a row, we have vaccine news to start the week. Last week with Pfizer, and just 1 week later, we're picking up right where we left off when the biotech company announced that their vaccine was 94.5% effective in the preliminary analysis of its large-scale clinical trial. In other words, even more effective than Pfizer's vaccine. The CEO said, for me, this is a game changer, noting, and this is very important in analyzing, that the refrigerator temperatures, the vaccine stays stable at 30 days. Analysis. Much longer than the previous estimated of 7 days. And this is a big, huge deal because the Pfizer thing, one of the big poo-poos last week is that it had to be stored at a ridiculously low temperature, and the Moderna does not, which means that the distribution of the vaccine would be much faster, more readily available to the public. And to be honest, having two working vaccines at this late stage means that if something goes wrong with one of them in stage 4 trials, you still have a backup candidate working its way through.
Well, you misspoke there. There's 3 working vaccines, right? We got the one in Russia as well, you know.
You got the biotech one. Biotech's one.
The one in Russia's already done.
Yeah.
So
you got Moderna, Pfizer, and biotech right now is the 3 vaccines you're working on. Pfizer last week, 90% effective. Moderna this week, 6-minute abs. Anybody? 94.5% effective. So we're obviously in that vaccine type environment of news, positive news, kind of supporting the theme that we've been detailing both in the podcast and all over the halftime report over the last couple of weeks. But when you're looking at this a little bit longer term from a technical perspective, if you remove themes, if you remove kind of the rotation that we've been talking about in recent history, and you just kind of focus on this from a technical perspective, you're looking at this and you're saying, okay, over the last few months, we've had some consolidation. If we can close above that 3,600 level, you're looking at that as confirmation. And why that's important, guys, is we're not talking about a daily chart where we're talking about swing trading. We're looking at this on a weekly chart. We're looking at this a little bit longer term, which means if we do close above that 3,600 level, we're talking about a breakout of all-time highs, and you're talking about a rotation scenario that is starting to happen that feels and I believe is different than some of the rotations we've analyzed in 2020, from pandemic to stay at home to economy reopening up to Fed-based themes. We've jokingly talked about how this kind of felt like we were swing trading rotation. This feels a little bit differently to me, and I want to get you guys' take on it here in just 1 second. Could this be a little bit more of a longer term rotation than what we have been realizing in 2020, where it's just like, when my son was a teenager and he changed his philosophy to life every other day? It's not that. This feels a little bit different. Let's get into it here in a second. when you're looking at some of the other indexes, specifically on the Dow Jones here, we're talking about a marketplace in the Dow Jones that has significantly underperformed its broader market counterparts. And the Dow Jones right now is showing relative strength both today, not only today, but ever since post-election, and for the first time in a very long time, we're talking about perhaps breaking out of all-time highs. And you would call this confirmation if you do break above that 29,500 level. But if you'll just notice here, guys, for a second, and this is not this would take my 11-year-old daughter about 2 seconds to analyze. Why would you buy anything at this point underneath 30,000? And so I do look at that 29,500 level and say, you know what, that is significant. That's the breakout channel of the old all-time high. But last week, where'd we kiss off? 30,000. It's very early this week. Obviously, we certainly could overcome that $30,000 barrier. But right now, where's the high of today? Literally 29,998. That is literally the high of the day. The high of last week, 30,000. The high of this week so far, 29,998. Guys, it doesn't take a rocket scientist to understand that there's algorithms there at 30,000 programmed to take in profit. Psychologically, from a consumer mentality perspective, they look at those significant whole numbers, and it is a major, major, major psychological barrier. So, the news we saw earlier today, very, very, very positive. The market performance, very, very, very positive. Looking at the indexes, both from a technical perspective, they want to buy. We'll break down the sectors here in just a second. They want to buy as well. There are certain sectors that want to buy a little bit more, but I still think even though the mentality is shifting a little bit bullish, and our rankings at Tackle Trading certainly reflect a slightly bullish, market environment in the short term, I still think technically that 30,000 is going to play a little bit of a role this week. If we do break out of that barrier, you got something that you might see some momentum above that level. But right now, you got algorithm selling at 30,000.
In terms of whether or not this is going to be a longer term rotation and theme developing, Matt, obviously we're in the beginning stages of that, but it's starting to look like it's got some legs here, quite frankly. Let me give you a couple of data points. I mean, the Russell 2000 month to date is up 16%, the NASDAQ only up 8%. Now, when we talk rotation, it's not like the NASDAQ's going to go down 10% while the Russell goes up 10%. We're talking relative performance. So when coaches strength, or veteran traders are talking about, well, we're rotating here or there, generally a rising tide lifts all boats. So if the markets are bullish, prices are going to appreciate across different indexes. But Matt, that's double the performance on small caps right now, for the month.
No, and we talked about this last week as well before today. I mean, today it's up another 2% on a very, very, very clean trigger. We talked about this trigger at 1750 last week, Tim. And, I said last week in the halftime report, something I haven't said in the last 2 years, ever since the trade war really kind of started in 2018. And that small caps are looking to outperform here, and not just in a looking at it from a daily price action, from a trend, from a pattern, from a relative strength, from a momentum perspective. They've been outperforming not only just today, but the last week, but over the course of the last month or so as well. And when you start to see small caps, start to show relative strength, when you start to see industrial, energy, basic materials, when you start to see them have relative strength, and it's not just today, guys, we're looking at trends, patterns, and performance today. But when you start to see that, and you're on the backdrops of that theme that we have been discussing, that theme that I've detailed for the last couple of weeks, and we went into a little bit of, well, not a little bit, quite a bit of detail in the podcast last week, of this economic reopening up theme, safely opening up with safety measures, stimulus to give these small businesses the ammunition they need to combat, these. I don't think we're going to do a national shutdown. Certainly could do a national mask mandate, but we're not going to do a national shutdown. What Biden has talked about in even before the election, but even after the election, is he does favor more targeted shutdowns, more targeted lockdowns. That means local municipalities. That means states have the decision and the control over what to lock down and what not to lock down. So we're not looking at a national lockdown here. That hasn't been in the cards. And so when you're looking at this, you're talking about a vaccine here that is going to be working in the marketplace. I know we're going to get the first phase of it later on this year, but for the public consumption, we're talking April, May, June of next year. And I think the market has simply embraced one simple philosophy. We're going to have a backdrop of Fed put. We're going to have a backdrop of monetary stimulus to overcome any short-term volatility that these small businesses and consumers in America are going to have to go through between now and when we do have a working vaccine. And everything between now and then is just noise to the marketplace. This market is embracing a rotation to a certain extent. Can it last? Can it have some legs? I think it can. I do. I think it can. I do think this is a little bit different than the rotations that we've seen in 2020. It feels a little bit different. And then you have on the backdrop of that, you know, with the backdrop or the backstop of Fed monetary policy, with the backstop of stimulus, you know, with that, you have this environment where with an earnings situation this quarter, it's, you know, when you compare it year over year, it's not very good. But when you look at it in the face of what these companies have had to be dealing with in 2020 with the pandemic, very, very, very positive from an earnings background. You're looking at a pro-economic agenda that is starting to form in the marketplace. This market feels like it wants to buy. It looks like it wants to buy. And the rotation we've been seeing, we've been targeting, we've been talking about, not for the last couple of days like everybody in Wall Street. We've been talking about this since literally the day after the election. Literally that day is when I laid out this argument for this theme being developed by the marketplace. And there is not one piece of evidence and one piece of data in the last 2 weeks that has made me want to come off that.
You know, and I want to say something to that right now, because if you're out there and you're halftime crew and you're here every day and you know that, Matt, you were on that before anybody else, and I just got to give you credit on that. I mean, before other people were talking about any of these types of ideas, any of the mainstream financial media, you name it, you were discussing this on the Wednesday after the election when we were still having a lot of conversations around politics and all kinds of stuff going on. You started talking about this, and we've been consistent with that now for a couple
Tim,
of
I literally called you at like 7:30 that morning. I said, Tim, I was up all night long, but I got it. I got it. This market is going to embrace a divided government. You're going to see the market embrace a divided government because the simple reality is they're going to embrace this because what the market hated about Biden was nothing, you know, specifically about Biden. It was the elimination of the pro-Trump business policies, such as aggressive corporate tax structure, deregulations, and so on and so forth. And so that was a very big concern coming into the blue wave when we saw that the Republicans were going to maintain the Senate. And I still believe that the Republicans are going to maintain the Senate here. With the Republicans maintaining the Senate, you're not going to see the crazy policies that a lot of people were frankly, we're very, very concerned about, and rightly so. And so I just felt like you were going to see the market start to embrace it. And, you know, it's still a little cloudy out there, but I certainly do believe the evidence has been fairly compelling over the last couple of weeks. And again, today, there's nothing in the data today that suggests anything else. When there is, we'll be the first to break that down. But as of right now, this rotation from, you know, you can call it growth to value, you can call it non-cyclical to cyclical, you can call it pandemic to economy reopening up play. However you personally want to define it, there's a lot of categorizations of it. But again, the question that I have, you know, ultimately is not if this is occurring. This is occurring. It has been occurring since you know, the day of the election, to be quite frank with you. Does it have legs out there? And when you look at the sectors that this market theme has adopted, you're really talking about, you know, 4 sectors that are really benefited in this environment if this theme does play out. The first one is basic materials, up about 1.63% today, threatening that breakout channel right there at 70. It has momentum in the trend. Pattern is a bullish retracement with momentum kissing off the 9 EMA. If you were looking at this sector just from a technical perspective, there's nothing to not like here.
Yeah.
I mean, nothing to not like. And if I did a deep dive on trend analysis here, you're literally going into stage 3 in a short-term Elliott wave pattern here, which is typically the biggest momentum behind it. A lot of people they get so frustrated sometimes when they initially miss out on a wave, and they're like, oh man, if I could have just went back to 3 weeks ago and bought one before everybody else in the world bought. Yeah, would haves and could haves and should haves. We all wish we could go back 3 weeks ago and buy before everybody buys. But the reality is, when these themes do get adopted by the market, they start to develop trends. And now you're still, even though basic materials have been very, very positive over the course of the last, few weeks, especially led out there by, some of those specialty chemical companies, some of those, a little smaller, but copper's been a real big winner there. Metals have kind of stabilized, with gold and silver stabilizing in the last week. You have a lot of positive mentality coming into basic materials. The second sector that certainly gets a little bit of boost in this, this theme the market is embracing is in industrial. Number one, economy reopening up. That's positive for the industrial sector. Number two, stimulus happening. Think about all these small businesses, guys. These small businesses, we're not talking about digital media companies like Facebook or Twitter. We're not talking about, media companies that can quickly go to digital from traditional. These small businesses we're talking about with stimulus protection over that 6 months between now and vaccine. When we're talking about that, you're talking about small businesses that are people to people type business. You're talking about, the construction company, the housing company, the small business like Nielsen Construction, which we come from a place called Emery County, Utah, and that is a construction company. They build roads, bridges, dams. It's an infrastructure company. Those types of companies struggle in this environment. Economically, they struggle, but with COVID and all the restrictions and the guidelines and ensuring it's safe for them, man, it is very, very costly. I mean, Amazon spends up to $100 million every quarter just on safety measures for their warehouses. And so when we're talking about that stimulus, economically dependent companies like these small businesses, a lot of them are industrial type companies. They need some help. Stimulus is pro for the industrial sector right now. When you're talking about the industrial sector and infrastructure potentially happening, and I know I'm a little bit like the boy who cried wolf with infrastructure over the last few years. I thought Trump made a mistake in 2016. I did. I felt like he should have put infrastructure in front of taxes. He chose taxes first, and then we just couldn't get anything done for the next 2 years after that. Literally nothing, because we started embracing just politics. We need infrastructure. It's something that Republicans and Democrats alike will agree upon, and it can be something, if we are going to come together as a country a little bit, infrastructure and job creation that infrastructure can do, that could be something that all of us agree on. Maybe that's a little bit of idealism coming from me, but I do believe infrastructure will be a major talking point in the in the next year to 2 years. And so infrastructure is beneficial in this environment. And what are you seeing technically? You're seeing relative strength. You're seeing outperformance. You're seeing a high base with relative strength here today, threatening that breakout. It already broke out of the 86. Now we're threatening that next momentum type trigger above 88 here. What we're seeing momentum in industrials. We're seeing momentum start to pick up a little bit in the marketplace. Finance is usually a traditional cyclical play that is an aggressive area of the market ever since really kind of the 1980s. And so before that, it was treated more like staples. It was treated more like a defensive play like utilities. Now it really is an economic indicator of pro-economic activity versus negative economic activity. And that's what cyclicals do. When the economy improves, cyclicals go up in value. When economy contracts, cyclicals go down in value. Well, what are we seeing with finance here today? This is an area of the market that has been under severe pressure. Under severe pressure has had a lot of neutrality in recent history. On the Pfizer news, gapped up, consolidated, played defense all last week, gaps up again on the Moderna news. Again, economy reopening up plays. You're seeing that. You're seeing it in the data, even though I'm not the biggest fan of the financial sector, but I think all of tackle trading knows that. And then when you're looking at energy, and Tim, I've said this many times, in every time we've seen these themes play out, what have I said about energy? We are not, this is not a true economic reopening up play if energy is not a beneficiary in that environment.
Yeah.
When you've seen a lot of these other industrial plays go up, the finance plays go up, a lot of times energy didn't support that. And I always say, no, this is just one of those pandemic rotation things we're looking at. When we actually see a positive pro-economic analysis, you're also going to see that come out of the energy sector, which is probably the number one cyclical play out there, in my opinion, right now. And so when you're looking at energy, you're looking at energy not only gap up on the Pfizer news, consolidated, played defense all day or all week last week, gap up on the Moderna news. You're seeing positivity coming out of the energy space. So when you're looking at these four sectors specifically, the sectors that are really kind of leading the charge here today, finance, still has a little bit of that defensive nature to it, so it's still positive, just coming down on the day. But specifically when you're looking at energy, industrials, and base materials, you're looking at these areas of the marketplace that are not just been outperforming from a trend and a pattern perspective. It's on the backs of this theme that is being adopted in the marketplace. And so until we start to see the data or the evidence in their trends and patterns start weakening, we got to be looking at this area. And swing traders are looking at these areas of the market right now, but swing traders are looking at every area of the market. Swing traders, simply because we're seeing relative strength in industrials, in base materials, in energy right now, does not mean traders aren't looking at XLC and saying, oh, I'm just going to shy away from XLC. We're talking about relative performance. And that's why the more I dive into this, the more I feel like Santa's coming back to town. He got COVID. I said last week, got COVID. He got over it. Rudolph's ready to rock and roll here. This market has a feeling like it wants to buy. And this market has a psychological demeanor, like it just simply does not care about any piece of negative data. COVID, 250,000 averaging cases in terms of new infections over the last week. 150,000 average cases, okay? Mm-hmm. Average cases. We're approaching 250,000 deaths, and this market doesn't bat an eye. Why? Because this market is embracing 6 months from now, and they're looking at this and they're saying, you know what? Yes, it's going to be shitty over the next 6 months. This is going to be a nasty winter from that we all have to navigate and deal with, and we're all going to get sick of it. But you know what? There is a light at that end of the tunnel. Pfizer CEO said it last week. I feel like there's a light at the end of the tunnel, and I feel like there's a light at the end of the tunnel here in this marketplace as well, in the sense that this market in the short term is discounting the negative reality. And if you want to understand a little bit more of what I mean by that, listen to last week's podcast. I talked about the psychological nature of the market, why they feel the psychological need to embrace theme-based investing and theme-based trading. And so I do feel like there's a little bit of a light at the end of the tunnel. I do feel like the market's discounting the negativity right now because they have put on the beer goggle glasses a little bit, and they are focusing on 6 months from now. When you're looking at some of the other sectors out there, from a technical perspective, a little bit, some of your traditional defensive plays, and this really is kind of a little bit of the similar theme here. Utilities, real estate, and consumer staples. Those three very defensive areas of the market. And again, I'm not saying that if the market does fully embrace this theme, that these areas of the market are going to go down. That's not what I'm saying. I'm saying that the areas of the market, like industrial, like like basic materials, like energy, they can have relative strength. And so if you were a hedge fund or a bank or an institution, you'd be like, yeah, I'll weight them as overweight or overperformance to a certain extent. If I was rating this against the market, I would say right now you would have to have industrials, energy, and specifically basic materials is overweight right now. Whereas when you're looking at some of these other areas of the market, it's not that you're shying away from them, but if the market does embrace an economy, a true economy reopening up theme, as it's starting to, if the market is embracing the Fed put, if the market is embracing, fiscal stimulus, if the market is embracing the things that I've been talking about over the last 2 weeks, it doesn't mean utilities is going to be bad. It's just not going to perform better. When utilities performs better than the market, you should start getting a little concerned. Right now, utilities, I would rate probably a little bit, market performance here. And so with utilities here, gap up, try to break down, fade down. That goes in line with the theme. When you're looking at XLP, you're going to see something very similar. XLP gap up, has some momentum, but a little bit of fading action here today. Although I do think that weekly chart on XLP has to be looked at.
I mean, that weekly W breakout,
that weekly chart on XLP is something is really sexy. But we've also seen a lot of evidence of XLP not exactly performing like traditional value this year. But you know what XLP is chock full of? Traditional value companies, right? Yeah. So if that rotation is true, we will see XLP continue to move up. But when you're looking at some of these other areas like XLRE, a little bit of the same thing we saw in utilities, gap up, fade down after the cash open. So the market wants to buy, it's just trying to figure out where's it going to have that relative strength. I think there is relative strength in industrials, base materials, specifically energy. Not the biggest fan of finance, but there is some analysis on finance there as well. And again, I'm not looking at utilities. I'm not looking at real estate. I'm not looking at consumer staples right now from a swing trading perspective. But even some of these sectors that would not benefit specifically off the themes I'm talking about, you're still looking at communications here. Communications, an aggressive sector, chock full of pandemic themes, not economy reopening up themes. But still, what's this sector doing here today? Consolidation, hovering under a very, very important breakout channel. Like even if this theme does continue to have legs from value, from growth to value, basically, are you guys not going to trade a breakout of 65 on communications?
Oh, it's probably the area I'm most interested in for the potential of the breakout. Materials and industrials are the ones I came into the week wanting to target, Matt, just because the strength in the materials sector was the highest rated sector we had over there on the newsletter at tackletrading.com. Yeah, definitely communications set up for potential breakout here. There's no doubt. There's not even a doubt in my mind.
Yeah, and then some of the other relative weak areas of the market, XLK here very quickly, technology. I mean, there's been a lot have been written in the last week about the death of technology, basically, because this theme that is being adopted in the market. But what's technology done other than just consolidate and play defense and not violate the 9 EMA in the last week?
Well, and how much are we going to crow about it if it broke out, right?
Like seriously, yes, it's relatively weak now. And it's not exactly, been the beneficiary of, post-election analysis. It's actually been a fairly big negative on post-election analysis. But since then time, it's still up. It hasn't violated one single support area. It just hasn't broke out yet. And so where you're looking at some of these others relative strength, and yeah, you're looking at those this week in the market, you're still saying in the back of your mind saying, you know what? Let's not move too far away from technology. Let's not move too far away from communications. Both of those areas of the market are setting up. And then, discretionary here, Tim. Discretionary, very similar analysis to technology and communication. So initially in the last couple of weeks, we're seeing relative strength. Early today, we're seeing relative strength. This is something that we're going to continue to talk about, but don't forget about technology and communications. When they fly, they fly better than anybody, and
Well,
discretionary.
and discretionary. I was going to say, I'm glad you brought that up at the end, because if we remember, guys, back in the summer when things were hot and running, tech and discretionary were right there, 1A, 1B. I mean,
And they've been 1A, 1B for the last 10 years.
Yeah, they've been doing.
And you would put communications there because communication was the newly mentioned sector from a year ago or a year and a half ago. But communications was in a lot of those companies were in discretionary or technology. So even though communication was an offshoot in recent history, it's the same type of analysis as discretionary and your pure tech plays for the last 10 years as well.
You know, I want to bring Mark in first, then I'm going to actually bring you in, Cody, here in just a minute as well. Actually, really good conversation going on in the chat. Actually, I want to bring Cody in first because the question I asked Cody will affect the question I asked Mark. Cody, come on in here for a bit if you can. Obviously, our resident lab technician, data-driven scientist. We love having you break this down. Good conversation with some of the halftime crew in the chat about this vaccine, Cody. My reading of the whole situation was last Monday with Pfizer. Incredibly positive news. The market loved it. My reading this morning is obviously incredibly positive news for humanity. Market likes it, but that's just because they loved it last week with Pfizer. It might have had the same reaction or better if Moderna came out last week. Cody, what's going on with this particular vaccine? Why are people excited about it and whatnot with Moderna?
What's this? It's the storage rate and the distribution rate. So Mark kind of touched on this at the beginning of the show. Negative 70 degrees Celsius is like a extremely industrial low level temperature freezer. Not all labs have freezers that low. Whereas you look at Moderna's, so Pfizer's has to be stored at negative 70 degrees Celsius, which I believe is like negative 50 or no, negative 94 degrees Fahrenheit, extremely cold temperatures. Whereas negative 20 degrees Celsius is about negative 4 degrees Fahrenheit, which that's an average freezer. So being able to be stored in, more typical type environments would be a lot easier for the distribution of Moderna's vaccine. Now, as far as the 6-minute ab joke that Matt made, 90%, 94.5%. What they did, and I haven't dug completely into Moderna. Pfizer released 90% efficacy based on their entire study, but what they didn't do is say who had the placebo versus who actually took the vaccine. So they could actually change their numbers around and get that to look better too. Moderna, I would speculate they probably released all the results for the people who took the vaccine and eliminated the placebo. But I can't say that for certain without digging into their numbers. But as far as what we're kind of talking about in the chat is there's 3 factors to any virus. How lethal is it? How contagious is it? And how mutacious is it? So lethal would be like Ebola. You get Ebola, there's about a 60% lethality rate. However, Ebola is not very mutacious or contagious. You have COVID, which is a great example of being extremely contagious, but we're not seeing the mutation rates in COVID, and we're not seeing the death rates of Ebola. And the last one would be mutacious, which would be the flu. And this is why with the vaccines, everyone's saying, we need to have an annual type vaccine for COVID. I personally don't believe so. The reason we have it for the flu is extremely mutacious, so it's mutating every single year. So the scientific community has to put out the next vaccine based on what they think the next flu strain is going to be in the coming year. And sometimes they, they're hit it spot on, and sometimes they speculate and they're wildly off, and that's when we have really bad flu seasons. So, they develop an, H1N2 vaccine for the coming year, but it ends up being, H2N2, and it doesn't have the same effect that it would. So when it comes to the overall vaccines, this is fantastic news. Unless we see COVID start mutating at the rate of the flu, I think this might be a shorter, people get the vaccine and then we start seeing those numbers drastically drop off, and then we might see pockets of COVID throughout the world in future times. But I don't see this as something that we're going to have an annual vaccine for, unless it starts mutating. If it does start mutating, though, then one of the factors that I was talking to Dina in the chat about is, and Greg and a couple other people in there, is right now the ACE2 receptor is what COVID uses to enter into our cells, into our body. The fact that it uses that receptor is one of the things that makes it so extremely contagious. So if it were to mutate away from that and become more mutacious, it might lose some of its ability to be contagious. So of those facts, if you get any virus that has 2 of the 3, then I mean, all hell breaks loose.
I got 2 things very quickly, Cody. Number 1, whenever you talk and you get all geek mode, I just get impressed. I'm like,
seriously, I was thinking the same thing.
Like when Cody geeks out, I'm like, he's just smarter than I am. And then number 2, I have no clue what you just said, but I think I heard a positive tone.
It was positive, right?
Oh, absolutely.
Yeah.
Positive
The
tone.
scientific community loves
Yeah,
this, I think.
and that's my point. Is the scientific community has loved what we've seen out of Pfizer and Moderna in the last week. I think we as a country and we as a world should celebrate what we heard from Pfizer and Moderna here this week as well. You know, this is something that we've been wanting for a very, very long time. But the thing that I heard a couple things, and which does lead to the positive mentality, Cody, is there is a lot of concern out there regarding if this is something we're going to have to do on a yearly basis, right, with mutations. But if it is not, then I think that, I mean, that just honestly adds to the bullish theme even more so.
I agree. So because I mean, you think there's some different things that we get vaccinated for just as children, and we never get a vaccine again. We never have to, not necessarily get a booster. Where there are other things that we get, and then we have to go back and get another one, say like the flu or like a tetanus shot. That you're always going back to kind of get another one. What tetanus is every 10 years, unless you get stung or hit with a nail or something, then you should go get one anyways. But
I had a lot of tetanus shots as a kid, by the way. That should
Heard
tell you
those
a lot
stories.
about our construction site. Yeah, I stepped on a few nails in my day, rusty nails, and whatnot. But yeah, I'm with you.
But if we don't see the mutation rate in COVID, and of course, I can't tell the future, but then we could actually see the drop off happen extremely fast, and then the pocketed distributions will be a lot easier, because once we start protecting the larger swaths of the population, the more vulnerable of the population, they get the vaccine, then we can really start targeting and say, okay, we're seeing a spike in this city. All right, let's get some extra distribution in the city, put out a commercial saying, go to your local CVS and get the vaccine. It's spreading really rapidly in your city. And then it can quickly cut those levels off. So I can see it kind of snowballing into us getting a handle on COVID within a matter of months. Once that hits the market. And my wife, she already said that she received an email from CVS saying, once distribution starts, you'll be able to come here and get the shot, free of charge. Very similar to, just going to the local CVS and getting your flu shot. That, like, when that happens, I can definitely see the virus, I don't want to say necessarily eradicated, but brought down to levels where we don't care anymore.
Well, and the end outcome and whether it mutates or not in a year from now, those are still some very much unknown factors that have to play itself out as science plays itself out and the virus actually kind of gets combated with these things. So some of that we will not know the answer to, although you have some positive anticipation. And I think the scientific community does as well. And I thank you for breaking all that down, Cody. Definitely appreciate it. Everybody out there, say thank you, Cody. It's great to have you to kind of analyze that for us.
Thank you, Cody, sir.
And Mark, the reason I had Cody come in here is because there was an obvious conversation going on with the halftime crew over in the chat about this. And I think it's captured the attention of a lot of people. This is on the backdrops. Matt did a really good job breaking down the data of what's happening with COVID right now. Mark, highest one-day record case on Friday, the 7-week average, like Matt talked about, 150,000. And yet this morning, Mark, I didn't see anybody talking about bad COVID data in terms of stocks. They're just not. It's not dragging the market at all. In fact, I saw it at Morgan Stanley, Goldman Sachs, JP Morgan. They're just talking about future forecasts for what the market's going to do. People are discounting this next stretch in front of us, right, wrong, or indifferent, but they're not as concerned about this concerning data from a health perspective when it comes to the markets. Do you think that will continue, Mark? And how are you approaching it?
I read, in preparing for the weekend prep class this weekend, I read a lot of different opinions on that. And it really was the question of on everybody's mind. Is this another fake out like we saw in June with reopening, or does this have legs? And I think it has legs to some degree. I don't even think that's really debatable at this point. Now, does that mean everything just goes up, up, up? You know, does that mean that some of these epicenter stocks just keep climbing? I mean, we're up huge percentages in the last 6 days, right? Definitely overextended from the technicals. Does it mean that you won't have days where like there's rumors of lockdowns where algos trigger things? Because I don't think the case numbers are going to trigger algos. I think you can base the assumption moving forward until you see otherwise that algos are not going to get triggered on rising case counts, rising deaths, rising hospitalizations, but they would get triggered on lockdowns. At least in the short term. Now, would that cause a huge, massive sell-off? No, but it would cause a reversion. We have a lot of headlines ahead of us. I feel very confident, as confident as I've felt in a long time, in how I trade, selling naked puts, lower levels, you know, that 0.1, 0.2, 0.3 delta, depending on the stock. Because I think at a minimum, until you see vaccine specific, like if the Pfizer vaccine were not to work, right? If something were to go wrong in the stage 4 trial of Moderna, unless you see something like that, I think at a minimum, you're looking at a level of stability. And so that's why, like the way I do things with naked puts, I feel very confident right now, because even if things come down and I get put something, if you were to have a big sell-off in an individual stock or a sector or an industry, that you're going to have a level of stability, because I think at a minimum, hey, things are going to be good, okay, one day, whether that's April or June or whenever, I think that is really taking hold. And so you're going to have something to specifically destroy that, to have people lose faith in that, to have any kind of significant reversion in your theaters, in your movie theaters, in finance, in oil. It can happen, right? We don't know the future, but I feel really good on specific stability. Now, upward price movement, that's not really my thing. I look at stability first, and if I get upward price movement, hey, that's great. Second, little overextended in the technicals in the short term, but I think you're looking at a bullish environment. If not, at least a stable environment for a cash flow trader like me, I think the sentiment has legs, and unless you see something go bad with one of the vaccines.
Yeah. And Matt, let's bring you back in here next if we can. And, obviously we appreciate it when Cody comes in and geeks out. That's always a great moment for me. It helps us understand some of what's going on with that. Yeah.
I said this 6 months ago. When Cody tells me a vaccine is safe, me and my family will take a vaccine, and that's how much I trust Cody's data.
And I appreciate that.
Yeah.
I'm actually the same way. As like I very positive on the vaccine news and everything, but I'm not taking it myself or advocating it. My family takes it until I get to see the scientific data, not journal headlines, not journalists trying to do their thing. I want the raw data that's going to be put into scientific papers, and that's where I'm going to be digging in hard and putting my degree to work.
Yeah, I'm very happy. Just personally, I'm very happy about the vaccine news over the course of the last week and a half. I think everybody in the world should celebrate the vaccine news. Mark, I fully understand and respect the risk just in case we don't get vaccine news or positive vaccine. But I do believe the market is working towards that positive assumption to a certain extent. But I will not be in line in the first go around. No, not going to happen.
No, and the nice thing from because I play a lot in the epicenter stocks, Morgan Stanley, this and that, having 2 vaccines, and if we get 3 or 4 that are getting into stage 4 trials, that really gives you some wiggle room if one of them doesn't work out, right? So,
and Mark, you talked a little bit about, you mentioned Morgan Stanley a little bit. Morgan Stanley basically said today, and obviously, can we all agree that the thesis I have painted in the last 2 weeks is a pretty bullish thesis?
Yeah, it's bullish.
Yes.
Yep.
It's a bullish thesis. Okay. I just wanted to make sure we're clear on that. We have the market right now ranked at 30. Right now, that's a slightly bullish ranking. We have it at 30. We are looking at potentially upgrading it if we do get a confirmation of a breakout this week. Morgan Stanley said today, guys, that they expect a 9% increase in movement in the S&P by the end of the year. A 9% movement. Now, I don't know. I'm certainly not that bullish in the marketplace based on the theme I have laid out here, but also you see our rankings at Tackle Trading. We're slightly bullish in the market. We do expect price appreciation, but 9% movement in a month and a half, guys, is not slightly bullish. That is a very, very bullish demeanor out there. Now, one thing I want to say that does support that, and something I haven't talked about today, but I want to talk about very quickly, and then I'll ask my question to Mark and Tim here, is earnings for a second. We're not on the back half of earnings, guys. We're almost done with earnings, right? We have 92% of companies so far in the S&P 500 reporting earnings. Now, a lot of this thesis that we've talked about and these themes developing in the market from the rotation discussions that we've been having, those are based on hypothetical scenarios that we think are going to be transpiring in 4 to 6 months, and that's what themes do. And again, if you want some detail on that discussion, check out the podcast from last week. But when you're looking at this from an earnings perspective, what we actually do know, here's what we actually do know. And I do have two questions here. Number one, we know 92% of companies have reported earnings. We know 84% of those companies have reported EPS beats above the expectation. We know that that number is a record number since FactSet started doing this back in 2008. So this is the highest number in terms of beats we've seen in the marketplace. We also know, not speculate, but we know 78% of those companies have also have had positive revenue surprises as well. What we know, however, is that growth, despite those record numbers we've seen in earnings, growth is contracted at 7% declined on year over year. Obviously, we've went through some economic scenarios this year that's to be understood. Doesn't need any further analysis to understand that. But we know earnings has been positive. We know the market is adopting a positive bullish theme right now. And we know tackle trading also is bullish, slightly bullish at a 30. But what about what Morgan Stanley said today, guys? Morgan Stanley came out today and they gave their price projection at 9%. They expect this market to go up into that 3,900 level by the end of the year. And that's a little bit more bullish theme that even I've laid out here. That's a fairly aggressive bullish theme. Now, you do have evidence technically breaking out of neutrality over the last couple of weeks. Obviously, the theme that the market is adopting is a pro bullish theme. Earnings in the last quarter have supported that bullish theme that growth is coming back. Yeah, we contracted 7% net against last year, but if anybody expected us to only contract 7%, like I said, I never believed in the V-shaped economic nonsense that was being discussed in the last 6 months. That was all political nonsense is what that was. But in terms of where we're actually at, I know a negative 7% contracted growth is not good, but it's a hell of a lot better than I thought we were going to be 6 months ago, guys. Mm-hmm. And so we're bullish. Morgan Stanley is ultra bullish, but specifically Mark and Tim, are you guys opening up that risk graph a little bit here? I know we're dipping the toe, guys. We've been dipping the toe for 2 weeks here. Okay, we've been. When we talk about these themes, guys, what do you think people are actually doing, right? You're dipping the toe. You're slightly making adjustments to your portfolio. But how aggressive are you guys looking to get based on everything we've been discussing, based on the theme that's been adapted by the market so far, based on the technical conditions, and based on the fact that this market does have a philosophy that it wants to buy, even though it's going to be choppy? I think it's going to be choppy, guys. Mm-hmm. I'm not sure swing trading is going to be the greatest environment. It might be. I'm looking forward to doing it. Don't get me wrong, but I don't know if it's going to be the greatest environment here. Okay. How bullish are you guys is my question.
Well, I'll answer first. I personally am not much of a directional trader, right? Long-term investor, naked puts, this and that. I am and have been over the last 5 days increasing the percentage of margin I use in my account. Percentage-wise, you'd have to say, like, I've been doubly bullish over the last 5 days than what I had been over the previous month. So for me, because Michael Wilson at Morgan Stanley and other, like, nobody's even like Lance Roberts, who does an amazing job that I get a lot of my insight from, writes a newsletter. Nobody's bearish.
Like, I haven't found anybody that's actually trying to embrace a bearish theme here.
And so, like, like for me, I try not to play the guessing game. How high can it go? But it does. This market wants to go up desperately. It wants to front run the vaccine distribution in June of next year. There is still that Fed QE. The theme from 2 weeks ago, long before we started getting a barrage of vaccine news. And so I feel very confident in a stable environment, right? The market can clip 6% and I'm just fine. And so, like, I mean, and to see a clip bigger than that, it would have to take something we don't know today.
Okay, so basically, in a nutshell, a notorious naked put grenade launcher is opening up the risk graph a little bit.
Oh, for me, absolutely.
Yeah.
For me, like, it's all relative, right?
Yeah.
And so for me, I absolutely am. I mean,
okay. So you're confident on a scale of 1 to 10. On a scale of 1 to 10, 1 you have zero confidence, 10 you are ultimate confident. How confident are you on the bullish thesis that is being adopted by the market? I'm going to say 6.5.
Through the rest of the year?
Rest of the year.
Yeah, I have concerns after the sell-off dramatically for the rest of the year. I'm an 8.7.
Okay, so you're not Morgan Stanley, but you're in that bullish zone.
Oh, I'm a 9.5 that the market doesn't dip more than 6 or 7%, and it has a minimum stability.
But if the market dips 6%, I promise you the Fed's going to have something to say. That's the Fed. That's the backstop of the Fed right there. So what I just said is the backstop of the Fed for the last 10 years.
Yeah, the only thing I have concern in the short term, because you're always trying to optimize entry, right? I mean, things are overextended right now. Like, things are a little bit overextended. So from a technical standpoint,
I would debate that, by the way. I don't have the market being overextended. I did last week. I think the consolidation changed that a little bit.
Yeah, like, I don't know, we're pretty far above that 9, but
you're 1 day above the 9. Literally, it kissed the 9 Friday morning.
Mark's not looking at the last 6 candles from overextended. He's looking from 32.50. And so
I mean, it's from 32 years ago.
Yeah.
So listen, I'm about as bullish as I ever get. So
yeah. All right, Tim, scale 1 to 10, 10, you're, ultimate bull. You're like, open up the, unleash the Kraken, open up that risk graph. 0, you're still in lockdown, that risk graph mode, protection mode. Where are you at today based on everything we've talked about and everything we've seen in the last couple of weeks post-election?
I'm still a little bit lower than Mark, probably in that regard. There's a couple things, and just flash through them as we go. Like Zoom, take a look at some of the real high momentum plays that are now taking it on the chin. Look at a Peloton, PTON. Obviously we're seeing the rotation from certain names into other names, and it's leaving me with, okay, so where's the broad market going to be? And back on technology.
If high flyers get smacked, though, the broad market could still appreciate
100%. So there's some things that I still have concern about. I'm seeing those real big momentum names underperform relatively the last little bit. And if tech broke out, Matt, I would be at a 9.5. But until tech breaks out, I'm still kind of hesitant. It was such an interesting risk graph we saw a week ago when Apple, Amazon, Google, and Facebook were down and the rest of the market was bright green. One of the most incredible things I've ever seen in my trading career, quite frankly. And I'm still trying to wrap my head around what that means. If it means that tech can still gradually appreciate, catch 3 or 4% while the rest of the market gets a little bit more, that looks to be the case of what's in place right now. So I'm going to give it a 7.5 5 for me right now in terms of how confident I am in the theme till the end of the year. There's still a couple of wrenches that can be thrown into it, in my opinion, and still waiting on tech to break out.
This
Tech
is the
confirms
first
and breaks
time-
out, I'm all in.
This is the first time I've been more bullish than you in like at least 10 weeks.
Yeah.
Like at least 10 weeks, which now scares me to death. Like I don't like being the bull. I don't like being the bull. I need someone to come in and be more bullish than me.
Well, I love the themes.
I'll do
I
it,
love
Mark.
the earnings
I'll
recap.
come in.
Yep,
I'll
go
come in
ahead,
and be
Cody.
the hyper bull. Smash
Mhm.
that buy button, stonks. Let's go.
Oh,
I didn't feel the conviction in your voice.
I didn't feel
sir.
the conviction at all. That didn't
what was the old thing?
believe
The
what you were
the
saying
theme?
at
I
all.
did not
Team-
feel a conviction. I
Team
need
one or one team. What was it that used to have, Mark? Everyone's
Oh,
going to make the stocks go up.
One
crew.
crew.
One crew. Yeah.
But here the problem is we don't have one crew. Until I hear Mitch McConnell stop poo-pooing stimulus, we don't have one crew. One crew only works when you got Jay Powell, the sentiment in Wall Street, and Congress all working together for one crew.
Mm-hmm.
We haven't had that for a while.
Matt, what about you? Answer your own question. You know, market 8.7. I said 7.5. I mean, how confident are you in the thesis and the theme?
Well, I mean, everything is based on the hypothetical scenarios of certain things playing out. I'd be ultimately confident if this was built on a foundation of economic reality.
Mm-hmm.
I'd be confident there. I mean, the reason I feel themes are adopted is because they're adopted despite the economic reality of the situation. So my ultimate confidence would be if this was a true value play, a value coming back, a traditional rotation, but we're still talking about the hypothetical scenarios that if we do this, if we do A, then B happens. If we do B, then C happens. We're still into that foundation of analysis. And so my confidence is not where it should be, because we're not based on any degree of reality here. But is it, how confident am I in the analysis? I'm fairly confident in the analysis. I don't know how I would actually rank it, to be honest, but I am fairly confident that I've had my finger on this pulse pretty close.
Mm-hmm.
Yeah, I really believe. I mean, the double vaccine news, I think, provides a backdrop that can not only provide stability but upward movement. It's one of those things that it really is a massive theme, and I don't think the market. It's not the type of theme that the market can get over overnight. Like I really think the only thing that could really hit that is a national lockdown or rumors of a national lockdown or something like that. If COVID cases get so out of control that something needs to be done. So
Yeah. Let's
positive
flash.
backdrop.
Let's flash through the commodity market if we can real quick here, Matt. There's not a lot to update. Nice little breakout on copper. Relatively Bitcoin still looking good, but let's give it a quick look, and then let's do some individual company news as well, if we can. Obviously, Monday morning, always kind of preparing the team for the week of economic data, reports, and stuff that's starting the week out from a price action perspective. Love the conversation in the chat so far. Matt, let's go to gold next. It should be a quick read. I don't see anything in the gold chart that really needs updating.
Nah, just, I mean, it doesn't need updating. It's just after the ridiculously bullish movement last Wednesday, and then the overreaction on everything following the cash open, you wanted to see if gold was going to play defense. It has. Support is still holding. Your confidence level is certainly building in gold, but true gold owners, their confidence is never shaken, like literally ever.
Mm-hmm.
If you want to talk about the most convicted buyers in the world, it's gold buyers. They're not going to be shaken on anything. So no, there's nothing to update here.
Copper next, if we can stay in on metals.
Copper.
This one needs an update. Nice little breakout here.
Nice little breakout on copper to that 3-2 area. We still got to navigate the end of the day here, obviously, but 3-2 barrier would be broken. And obviously for a lot of taco trading copper, I mean, the analysis is really, Freeport McMoran. That's the stock we like playing in copper. And, the breakout, the retracement, snapback retracement into the 9 EMA, rising 9 EMA, kind of caught into that zone, broke out. I think copper, I mean, we're definitely bullish on copper. There's no doubt about it. It's one of our highest rated commodities right now.
You know, and Matt, you've been talking about the technical breakouts that have been developing for some time as we've been looking at the charts. Mark, you've been very bullish on copper for quite some time.
For months and months
as much,
and months.
you know, several times I can remember you calling for 330 to 340 at some point. Now, you mean we're at that 320 mark, testing a breakout. How are you seeing copper here? Still upward?
I mean, I've really thought copper had a good chance of hitting 3.3 by the end of the year, which is a major form of resistance if you look back at a multi-year chart on copper. And so at 3.3, I would start covering calls. I would be hesitant to enter anything new because it's a pretty significant. But a breakout of 3.3, man, you got a lot of clear air. And so I'm bullish on copper throughout 2021 unless something changes, and it's been playing out that way.
Oil next, if we can. Obviously, the energy stocks. Matt, you looked at XLE earlier. They were up almost 6%. Crude oil up about 3% here, and now only 2.5%. Actually, selling a little bit. Still stuck in the range. I did see the IEA followed suit with what OPEC said last week and downwardly revised their 2021 forecast for oil demand. Shocker, shocker, shocker. Obviously, kind of stuck here. I don't see anything to add. Either of you have anything on oil?
Anybody has interest in short-term bullish retracements off the rising 9?
I have no interest in this one.
I don't know.
No, me either.
Yeah.
Move on.
Yeah. The dollar, nothing. Stock actually sitting on a doji, nothing to see there. And then Bitcoin, just take a quick peek at Bitcoin if you can. Just continued strength here today, guys. I mean, 16,700. We talked about the breakout. Momentum has been in play here for quite some time. It's a beautiful and very impressive thing to see. And, you know, Matt, you know, we've nailed this one, quite frankly, for quite a while. What are you now seeing in Bitcoin? Are you watching some of those 18 to 20,000 levels, still seeing those as like position trading targets? Like, how would you interpret this chart right here?
Obviously, you're momentum trading this at this point. Like I said last week, I was hoping that we'd see a little bit more of consolidation on this major breakout of 16, but you're not going to get what you want. Market's going to do what the market wants to do, and it's just a matter of how you're going to react to it. I do think 16,000 is obviously the number, you know, we're looking at here. Gap down on last night's futures open, where it finds support right there at 16,000, and then you're up, you know, 800 points, up 3% since that moment in time. That's how important that 16,000 barrier is. We talked about it, you know, 2 times last week, you know, both in terms of the breakout consolidation as well as the snapback, you know, doji it had on Friday. So until that 9 is violated, you ride the 9. This is ride the lightning. If there's ever been analysis on anything, it's ride the lightning. You have the 9 EMA, and the 9 EMA is ride the lightning, and until that is violated, you don't change the analysis.
You know, since it started riding that 9 around that 12,000 mark, a little bit before that, then breaking out. I mean, we're up almost $4,000 on Bitcoin since that breakout. That was only a month ago, Matt. It's had an incredible run. There's no question about it. Let's talk companies here for a bit, Mark. Also, you know, there's some earnings companies this week that are coming out with their earnings reports. Mark, you had interest in having a conversation about which ones matter the most. We're looking at retail names, Matt. You know, obviously, we'll get to some of the earnings reports from JD.com, Palo Alto here in just a minute. Marky, but for the week, I would say a Walmart, a Home Depot, a Target, a Lowe's. They're all on my radar from a retail roundup. Marky, what are you going to be watching for this week from company earnings?
I mean, because when you looked at the week ahead, you don't have a lot in the form of catalyst, right? Like, not a lot of economic report. Jay Powell's not scheduled to speak. You're not going to get any stimulus conversation at a Congress. You don't have a lot of the week. The one thing you have is retail that could serve as the, hey, everything is great, right? You know, you got Lowe's and Home Depot and Walmart and Target. And the last time they reported, they killed it. And they actually served as the backdrop for a very positive week. These companies have a tendency to report when nothing else is going on. And so they kind of serve as the base for maybe the story of the week, other than what obviously is vaccine news. You also have retail sales report, the monthly report coming out on Tuesday. And so you have a potential mini theme that could develop this week that themes are good. Home Depot killed it. Target killed it. Lowe's killed it. Walmart killed it. Now, the question I have, and I'm sure a lot of market participants have the same question, is you had a lot less stimulus in the environment. People were opening up a lot more and doing other things. And remember the Target CEO, the last earnings, he says, listen, we benefited a lot from the current environment. People staying home, lots of stimulus money. And
Home Depot and Lowe's, same thing.
And so they specifically said that, hey, we really benefited from this very unique circumstance. And so it's going to be interesting because people were doing a lot more than staying at home this last quarter. There was less stimulus money in the environment. How's retail going to do with that backdrop? I think it's going to be very telling. Now, if they come in and kill it again, boom, that's going to be a positive theme to the market this week. It's going to be hard not to. Now, if they don't do as well, then it might cause a little bit of concern. Not enough to create any cataclysmic event or anything like that, but it's a big week for retail. It's a big week for retail.
You know, and speaking of that Home Depot earnings, they actually had a little bit of news this morning where they bought HD Supply for $8 billion day before their earnings report. It's going to be a big week for retail, no question about it. We'll break those numbers down as we go through it, Matt. We did get a couple of companies with earnings here today that I do want to at least get the numbers from. Let's start from Palo Alto Networks if we can, Pan W.
Well, I do want to talk a little very quickly about what Mark was talking about.
Sure.
You know, Mark, we have 92% of companies in the S&P already reported earnings. Yeah, you know, last week I think we were at 86% and 70, what was it, 78% respectively on EPS versus revenue beats. This week we're 84 and 78%. I don't think a combination of Walmart, Home Depot, Lowe's, Nvidia, Target, TJ Maxx, Baidu, NetEase, Raw Stars, and Palo Alto are going to change the overall quality of this earnings season. Would you agree?
No, we already crushed it.
Okay, we already crushed it.
Yeah.
But I do think Mark is onto something in these micro type analysis, specifically these stocks like Home Depot, Lowe's. You know, they saw tremendous revenue they were tremendously stay at home because of at home projects, right? Can they still beat despite that happening in the last 3 months? That's a question. So I do, but you know, looking at this week, I would say Home Depot's and Lowe's and Walmart are the three I'm looking at this week as the most important reports. You do have micro analysis that is important in TJ Maxx, Ross Stores, as well. You know, Nvidia specifically for, you know, the tech space, semiconductors, and obviously and with NetEase, but Palo Alto with, you know, cyber security and whatnot. So I do think there's some micro analysis that is important here, but nothing major theme. Now, in terms of a couple different companies, in terms of just rounding up earnings here, let's start with JD.com here. JD reports earnings of 50 cents a share versus 41 cents on the expectation, 25.7 billion versus 24.8 billion on the expectation. So again, another beat on EPS, another beat on revenue, consistent with what we've seen, 36% increase in growth. To me, you know, JD here was a show me type play. You were threatening a breakout. You've had price appreciation quite aggressively over the course of the last 3 months. It's a little bit of a show me. You were sitting at resistance areas. And remember, I've said this many times. I'll say it again. I'll say it till the cows come home. When you're looking at a market reaction, you have to take into account where the market is in relationship to support and resistance. And if you don't overwhelm at resistance, that gives the market a little bit of an understandable reason to lock in a little bit of profit. So you're just a little bit overextended. I wouldn't, you know, read too much into the negative reaction on JD's report. Just kind of par for the course with JD. Palo Alto, PANW, reports earnings here today. One of the more, I don't know, followed cybersecurity firms, Tim?
I like this firm a lot. I always have. And they used to even be more followed than they are the last couple of years because they kind of went into a consolidation here for a few years, Matt. But I really believe in this firm's long-term fundamental premise, their business model. And, you know, I'm a believer for sure. Yeah, they're a pretty popular cyber company. Yeah,
and I've always kind of felt cybersecurity was going to be so important in the future. And I've had that philosophy for a while, but, you know, Palo Alto, you know, I know the performance, you know, post-pandemic has been impressive from 125 all the way to 276. But when you're looking at this over the course of the last 3-4 years, you've had a lot of up and down, a lot of up and down, wicked, volatile, sideways action here. You're finally achieving a breakout of that all-time high. The last time we did, You started seeing a real good price action before pandemic hit, obviously, or excuse me, economy reopening up theme came back down. Now you're threatening that breakout. I would keep Palo Alto on a watch list. Let's see how it performs on this weekly chart, but it's a company I do like in that space. And then I was going to say TSA. I might be thinking about flying there, buddy. Tyson Foods here. You know, we've been talking about the pickup in value here. Tyson Foods is obviously one of those plays. Tyson Foods comes in today, and in my opinion, pretty decent report here. Came in at 1.8. Oh, and Palo Alto. I never. Let me hurry and give. Not PAWPNW. Let me hurry and give their numbers here. I went into the technicals because I kind of like that weekly chart there.
It's looking good long term, bro. Yep.
$1.62 versus $1.33 came in at 946 million versus 920 million. Revenue increased 22.6%. And they did increase guidance on Palo Alto, but they did the trick, right? They increased it just a couple pennies against, $4 billion in revenue and call that an increase in guidance. They did do that. But again, just wanted to point that out. On TSN, Mark, and I do want to get your take here. TSN been stuck in the mud post-pandemic, real kind of that neutral consolidation that traders love cash flowing in over the last 6 months or so. But you're now starting to form a double bottom, double top. And, the earnings numbers here today came in at $1.81 a share. Versus the expectation of $1.15. Revenue came in at 11.5 billion versus 11.1 billion. Revenue did increase 5.3% year over year. Pretty decent beat on EPS. Really good beat on EPS numbers. Revenue just kind of lukewarm here. Market response so far from the open here today on the overnight action was fairly positive. If you look at this on a 15-minute chart, here you see the earnings announcement, fairly positive. The earnings call can be a risk into what the CEO says, comes back down, consolidates. But look at it threatening that 65 barrier right there. I kind of like that above 65. And then when you're looking at this, you do have overhead resistance between 67 and really $70. But for the first time in a very long time since the pandemic hit, you're finally getting above that 200-day moving average. With 4 days of consolidation, this is a play. Now think about this, guys. This is a play that showed a gap up off support on the vaccine news of Pfizer, consolidating, playing defense all last week, hovering that 200-day moving average, breaks out of that 200-day moving average on the cash open, tests the 200-day moving average, right back up, forming a doji candle. Is this an area specifically on Tyson Foods, Mark, that you'd be looking at saying, you know what, this fits a value play, this fits a cash flow play? It just screams you, bro.
Now listen, these are the type of plays, and I really believe this, and I'm very, very strong, and I've been talking about this concept in a long time. Budweiser, PPC, the chicken company, Tyson Foods, Prudential Life Insurance. I've been talking these type of companies a lot this year, and they're my preferred pandemic plays. There are companies that have gotten really beat up from the pandemic, but they don't require people. Like, I still have concerns over movie theaters. I'm not going to chase price. I have still concerns over airlines. I'm only going to buy at a discount because we still need a return to normalcy, and I don't trust stimulus. But these type of companies that have been beaten up this year a lot, I think this is where some of the highest returns are going to be in the next 18 months as far as overall returns, with a backdrop of safety that if even, let's say, COVID reverts itself and gets bad, you come back, you have a nice cash flow stock, right? Something you can cost average down, something you can add more shares, something that has no threat of going out of business. So I love these type of plays. I love them a lot for the next.
And Mark, I mean, everybody in the market talks about the high flyers, right? Everybody talks about them. But here's a company that is boring, good cash flow company, pays a decent dividend, food-based company, right? Food-based company, a utility to a certain extent, has a PE ratio at 12.45.
Wow.
Listen, I think there is, like,
after an EPS beat of 181 versus 115. So I'm just saying, if we are going to see these themes develop that we're
Mhm.
talking about, and if value is going to have its day in the sun that it has yet to have in 10 years, and that's why this is such an important question, is growth has been the flavor of the month for literally the last 380 months. So,
Mhm.
in terms of this, that's why I think this question is so important, and why I feel like, not why I feel like, but why I have spent so much time in the podcast, in the halftime shows over the last couple of weeks detailing this, is because I do feel like value can come back a little bit. And when value isn't, and when we're talking about value, yes, we look at all these different companies from a value perspective that we will just categorize as value. But when I talk about value, it's assessing value. And here on Tyson Foods, you got a company that's starting to show a little bit of lifeblood that fits the theme that, Mark, you and I have talked about so extensively, and is not an overvalued company coming into this type of price movement, which does lead me to believe that it could have some legs. Now,
Yeah, no, and if Tyson's too expensive for you and you want meat processing capability, pull up PPC, cheaper stock, same general
same general
philosophy,
philosophy, good trend
but
here
cheaper
developing though.
stock, nice breakout, something I've sold naked puts on several times. You're having a nice signal, reasonable value. And a side note of why I like, and this is from a very long term, I love the meat processing plants from a long term point of view. They are investing in robotic automation.
Yeah.
Mhm.
And
Yeah, I saw that.
this is not 100%. And like, for example, the current technology they have, they can't quite replicate the human speed at which they do, but they're investing in it. When that becomes fully automated, a lot less jobs, right? But unfortunately, you have to analyze it from a cold. A lot long-term profitability with that move to robotics in the processing of meat. Love the plays. The train might be leaving the station a little bit. So I love it from an investing. What's it going to do in the short term? I don't know. But
I like this, Mark. This is how I see the two. I like if you're looking at a trade to take advantage of price direction here, I like a trade on PPC. But if you're looking at position to investing here and you want area in this space, I like Tyson Foods. So I see them a little bit differently when you're talking about the fair value conversation I was talking about. Yeah, price is cheaper on PPC, but valuation's better on Tyson Foods. And so when you're looking at, PPC, 24 PE ratio with a forward PE ratio of 9, Tyson Foods forward PE ratio of 12, forward PE ratio of 10, current PE ratio of 12. I like Tyson Foods a little bit better from a position to investing perspective. I can definitely see trying to take advantage of the price direction here on PPC. Feels a little bit more growth based, a little bit more price appreciation based.
Yeah, but if Tyson breaks resistance, I mean, it's got some clear air too. So, I mean, there could be a discussion there in that regard.
No, growth certainly is. Investing certainly, growth is certainly a part of investing.
Yeah.
It certainly is. But
Yeah.
there's nothing that. Let me just put it like this:
You don't need
my
it.
analysis doesn't change.
Yeah.
I still got PPC as a more of a tradable instrument versus Tyson Foods more as a cash flow investing instrument.
I love it. Very interesting. And those low PE ratios grab my attention with the profitability they had this quarter, Matt. I appreciate the breakdown on that
And
one.
very quickly, Tim, before you close up shop here, my
Mhm.
girl Linda, she's been asking a couple questions. I'm going to have some answers here. Warner Music Group, you had a question regarding Warner Music Group. First and foremost, IPO from earlier this year. We're just starting to get a couple earnings reports. Obviously, we have one coming up here. So from a trading perspective, there's no trade here. You're too tied against an earnings report to get a statistical edge, in my opinion, one way or the other. So the question is, from an investing perspective, if you are investing in Warner Music, the question is, do you feel the need to protect it? Recent IPO, we don't have a lot of evidence here on Warner Music regarding massive volatility shifts on earnings. However, we only have one. If you're investing, I would look at perhaps protecting against the investment, locking down that risk graph, how we've talked about closing down the risk graph, buying a put option. I do like it. Now, Linda, I know you're a little bit more aggressive. I know Linda very, very intimately. I know Linda. Linda's a very little aggressive, right? She's a little aggressive. And so I see Linda, I know you're looking at that $30 mark and you're saying, you know what? I can get this above 31, quick trade to 31 by 32. Yes, I have no problem with that if you understand what that earnings and how that earnings can play a role here. I definitely see a momentum trigger above 30, playing the aggressive to 31 T1, 32 T2, but I would say that's only for people that understand the earnings. For people that are fairly new, you are not fairly new, Linda. But for people that are fairly new, I would say you're too tight against that earnings position. Wait till after earnings. And like I've said, you've heard me say this many times, Linda. If the move is legit, yeah, you might have to pay a little bit of a slightly higher price here, but you'll have increasing probability post earnings. So if you're looking at this as a potential investment trade position, I personally would wait till after the earnings announcement. That gives us two earnings announcements that we now know how the market starts to perform. We need those two data points to start looking at patterns here. One, we have no clue. It's just a crapshoot. So I would say give it a little bit of time. Let's be patient. Warner's very new. We don't need to jump. We don't need to jump on it, be too premature. If earnings are positive and we start seeing trends develop here, Warner Brothers could be something we're talking about, not just in terms of a one-time quick trade from 30 to 31. It could be something we're talking about from, snapback retracement to 30 with the target of 32, breakout of 31, target 33. So there could be some really good trades coming up in the future, especially post earnings. I like this analysis starting post earnings. Even if we're looking at, say, trading a breakout of 32, I like that a little bit better, paying a little bit of the higher price, but removing the uncertainty of earnings from the equation on Warner Brothers. And then on McCormick, on McCormick here, or not McCormick, McKinnison here, showing a little bit of a high base, still overextended a little bit, performing like the rest of the sectors we've talked about here today. So staples, finance, real estate, utilities, all gap up, all come down here on the day as well. And when you're looking at MCK, you had it as a high base. It comes down off the high base, obviously a healthcare stock here, but it's still showing relative weakness on the day. I would say this breakout was a little premature. 9 EMA had not caught up to it. I would say be a little patient here on McKinnison, because there are better breakouts out there in the marketplace in general here than McKinnison. And when you're just looking at, say, let's take a look at the stock report very quickly, right? And let's take a look at just a couple candidates very quickly. Take a look at Colgate here. Colgate, forming a little bit of a high base after the momentum snapback rally, pressing against that breakout channel 85.73, triggering above the high. I like that breakout play a little bit more than the MCK trade here. Look at EMN a little bit here. Eastman Chemical in the basic materials space. Chemicals have been a very big bullish environment for basic materials. It has been the area of basic materials that has been holding basic materials up. It is not gold, silver, platinum, palladium. It is really those chemical spaces of basic materials. That was on the report. Nice little high base. What's the difference, though, between this and McKinnison? The difference is the 9 EMA had caught up to it. The difference is the sector analysis also supports it. The theme also supports that as well. The struggle you have in healthcare right now, and yes, I do see the momentum of healthcare. We do have it properly ranked right there with the other sectors, but it's very news driven. I don't have the same degree of confidence looking at healthcare stocks as I do basic material stocks, for example. So I like EMN on the breakout a little bit more there. A very similar company from a technical perspective, just from the stock report, is ON here. This is a semi semiconductor company. High base scenario, still rising momentum, very similar to McKinnison, forming that high base. But what it doesn't have is the random volatility over the last few days. And we're dojing, approaching a breakout channel there. We saw, a lot of spaces in the hotel and leisure business that we're looking at bullish retracements. I think there's better areas of the market here this week that you don't have to navigate on McKinnison, MCK here a little bit like you do with healthcare. They obviously had a very good, earnings announcement. I see what you're seeing on McKinnison. I just don't have, quite frankly, I don't have a lot of faith and confidence in the healthcare space from a consistency perspective. I see it very similar from a trend and a pattern perspective. You're looking at utilities here. McKinnison is doing exactly the same thing, not utilities, but the healthcare space is. Do you see the random? It just feels random to a certain extent, and I don't like the news. So I would say there are better plays out there on Warner Music. You got to navigate that earnings. Number one, you got to navigate that earnings, no doubt about that. On McKinnison, I'm a little shy in the healthcare space right now. I think industrials is a better area of the market. I think basic materials is a better area of the market. I think finance is a slightly better area of the market a little bit. And then when you're looking at technology communications, a lot of those earnings announcements have been in the rearview mirror. We're looking at those that have been relatively underperforming, but technically when you're looking at communications, you're threatening a breakout out of an all-time high after months of consolidation. You should be getting ready for that potential breakout. Probably even more so than technology. Technology, even if it does see price appreciation, has to navigate some of these resistance pivots above it. You do not have that on communication. You break out of 65, you are in that open up the risk graph, unleash the Kraken, and let's get greedy mode to a certain extent. So I don't think you force it in healthcare right now. I could be wrong. Trading is a probability game. I could be wrong, but there's just other areas of the market I personally have a little bit more confidence in. Warner Brothers, aggressive swing trades, certainly see it above 30 momentum to 31, 32, but things can be random in the last week before earnings. We know that, and you are tied against that earnings. McKinnison, I just think there's better areas in the market that are, and let me just put it like this. We analyzed McKinnison over the weekend. There's better breakout candidates. There are better breakout candidates. Work off the reports.
Yeah. There was even one really good one on, you mentioned financials, Matt, insurance of all things. Aflac on the option report was looking like a nice little breakout candidate as well. Love the breakdown on all of that. Guys, that's really all we got here from a show perspective today. Let's start moving and get some final thoughts. Marky, what messaging do you want to say to our team out there?
Listen, this is the main thought I had with a bullish tilt last night in the weekend prep class was, listen, there's a lot of different areas in this market. Stay at home, growth, value, epicenter stocks. Just don't have all your eggs in one basket, both from a trading and an investing point of view. That way you're not as susceptible with the headlines. What we've learned in 2020 is that eventually everything gets lifted up. Tech doesn't have a day, it takes a few weeks off, then it has its day, vice versa. And I think you're going to see that cumulative effect of lifting everything. Just diversify in different groups to protect yourself from any one headline.
Give me Tesla, TSLA, Matt, just for my final thought here. I thought it was a really cool thing last night, finally, and we want to bring up Tesla so I can bring up SpaceX. They're not publicly traded. They had a planned launch on Saturday. The winds kind of pushed it out till Sunday. Finally, last night, 7 o'clock, 7:30 or so Eastern Standard Time, SpaceX did launch their flight for a 27-hour voyage. The Falcon 9 rocket had 4 different astronauts on it. They're heading for the International Space Station. I just think I geek out about that kind of stuff. I'm like a little kid, quite frankly, when I see this kind of thing. And just human innovation, very, very cool moment for humanity the last little bit. We've seen a couple of different rocket launches go very, very well with these things. Matt, do you enjoy the space flights? Do you enjoy the rocket launches?
Oh man, I geek out like a kid. Are you kidding me? I get all I see the flag on the shuttle, and I just get all like geek out, like I'm watching Armageddon, and the little kid's cheering on his dad as he comes home from saving the universe from an asteroid, right? So yeah, I do. But my question to you is, do you think the astronauts watch Armageddon as a motivational factor?
Probably not, because it doesn't end well the whole way there for
Are
everybody.
you kidding me? If I was an astronaut, I would watch Armageddon as a way to get all jacked up, ready to take on this. I'd be like, yo, yeah, let's get in freedom. Let's get in liberty. Let's go do this. Oh, yeah, I geek out. Yeah, I like it.
I'm not sure what movies the astronauts watch before their space flight. I doubt it's a space movie, though. I bet they're going to go something else.
Really?
Kind of,
Okay, let me ask
yeah,
you a question. When you watch Wolf of Wall Street, do you get a little fired up?
sure. Yeah.
All right, so why do astronauts have to be
Maybe it is, dude.
not like space movement? Wouldn't you think somebody who's dedicated their life to the concept of space might actually appreciate a space story?
I would love to hear from them now. I have no idea.
Yeah.
I have no idea if they do or don't. I'm just speculating rampantly about what astronaut movies that they like, but it was definitely a cool moment. There's no question about it. And
I thought
just
it was
watching
cool.
it, you know,
I thought it was cool.
yeah, just a reminder, innovation, humanity, we're always going to move forward in some form or fashion. We're going to find the positivity and make it work. No question about it. Maddie, final thoughts from you, sir, for our team.
My final thoughts are to Sky 1187 there, Sky. I have zero clue if you should sell your call option. I have no clue what your trading plan is. I don't know how that fits within your trading plan. I don't know how that trade would fit in your portfolio design. I don't understand how JetBlue, what time frame of trade you're looking at. I don't understand. I don't know what strategy, what delta, what concept. I don't understand position size. There is zero way anybody can answer that question, Sky.
Yeah. Yeah, we're not here to manage the trade, so definitely not.
No, there's just too many variables, right?
100%.
There's too many variables. I would say, Sky, if that question does typically lead to some degree of swing trade analysis, is what I'd say. And I would say, as a swing trader, you just pivoted, and are you going to reaction off of one day off of resistance holding when resistance hold all the time? So if you bought last week at 15, I would say you bought wrong. I would say you bought when everybody else was well, it's fine. Oops is fine. There's nothing wrong with that, right? We all have our oops. I would say off these types of gapping situations, Guy, I would always recommend be a little patient, let the market set up and determine what it wants to do. It can form a high base in that capacity. It can form a retracement, and it can form just pure momentum. You need to understand how you're approaching that. And so a momentum trader would have been looking at that day post-vaccine and said, I'm looking to trigger above 16 to continue the momentum to the upside. The more patient swing trader would say, no, I'm not going to trade the momentum. I'm going to wait for that next setup, and I'm going to wait for that next setup. So if you're looking at chasing JetBlue on the gap up, no, I wouldn't. I wouldn't be doing that, Sky. I'd be looking at how it performs around $14, and if it comes down underneath 14, underneath the 9 EMA, which is really kind of the reason, at that point, I would suggest you have a management decision. But simply because resistance holds on the first update does not mean you have a management decision yet. You still have a bullish trend. You still have a bullish pivot. I would suggest, Guy, next time, don't buy the stock at resistance. Wait for the scenarios that, for those scenarios to play out. The gap up will kill everybody, Sky. Like no trader likes gap ups, because what they do a lot of times is they gap up above the triggering mechanism that you're looking at actually doing here. So what I would suggest here, Sky, so for example, take a scenario, take a stock like on the stock report this week, AMCX, right? AMCX here. So this was one of our reversal characteristics that we liked from the stock report. And what did it do here today? It gapped up and then it ran. Well, if you were to put your order in right here at 26.50 and you had a buy stop limit order, it gapped you above your order and you missed out on that, and then you're in chase mode. Well, if you miss that trigger, which happens to every trader all the time, tackle trading, how many times in the last 6 months have you guys missed down on a really, really, really good trade, right? A really good trade, simply because it gapped up over your order. It happens all the time, Sky. So what I would suggest is that when you're looking at your trigger, because that's what it seems, and again, I'm just spitballing here because I don't know exactly what's going on, Sky, but I want to give you some advice. I would say what happened here, Sky, is you were looking at proper analysis. You were looking at a proper technical trend. You had the right edge. I would say that. The problem was it gapped over your order and it gapped into resistance. And when it does that, it's frustrating, believe me, because you're like, my goodness gracious, I was right. I was right. I was right, but you didn't make any money. It's frustrating. It happens. Don't chase it simply because it gapped over your order. Reassess the situation. On JetBlue, you're sitting right at resistance, right into that breakout channel. And at that point, you just got to reassess here, my friend. So I would suggest always plan the trade before you ever make the trade. Never have open-ended orders. Make sure you know what your max you're willing to pay and the minimum you're willing to pay. Bracket those orders in. If it gaps up, you have to reassess the situation, especially when you gap into a known resistance area like that, Sky. And I'd like to know if I should get out of loss or wait. Well, number one, hold on. Number one, no, you can't. No, you can't. I don't want the hammer here. The hammer's not necessary here. Sky gets it. Sky understands it. Sky doesn't need you to come in like a blunt force, object and just knock somebody out. Sky, what I would suggest is your time frame is too short. You have until November 20th. You can't expect to make money based on that, Sky. You can't expect to make money when you're buying call options with 10 days left in until the expiration and actually expect to make money long term on that. Yeah, can it happen on JetBlue? Absolutely, it can happen on JetBlue. It can happen on any company. But what are you fighting? You're fighting gamma sensitivity in the last 10 days. What are you fighting? You're fighting the unknown variables that you don't see because all you see is JetBlue on a chart. But what you don't know is that call option has more than just delta in it. It has more than just price appreciation in it. Theta JetBlue, let me get the right symbol here. JetBlue, Theta is destroying that option, Sky. That option, Theta is like sitting back and saying, oh, thank you, Sky. Whoever sold, Mark probably sold that option to you, Sky. Mark sold you that option. And Mark said, you know what, Sky, you take your JetBlue hypothetical, call option. I'm going to take the cash flow. Cash flow traders love it when people buy short-term options. That allows think about this, guy. That allows people like Mark, cash flow experts, just to nickel and dime you over and over and over and over. And you might be saying, well, this is just one trade. Sky, this is how Mark pays his bills, by taking your money every single month because you're buying a short-term option. Now, you might think that was aggressive. It's not. Tim is going to do far more aggressive. What I'm saying, Sky, is let's learn from this.
Yeah.
Lesson number one, let's not buy 10 days in front of option in time frame. Unless you're day trading, that's ridiculous behavior. Number two, okay, when it gaps over your trigger, show the patience, reestablish the analysis, and see if you like the trade again. Is that good? We good? We good.
Yeah. And come back and join us, Sky. We break down
love
markets
Sky.
each and every
Love
day.
Sky.
Click subscribe, click the bell, come back and join us each and every day.
Sky,
do this.
Listen, we've been doing this for a long time. I promise you, and I'm just going to say it how I talk, Sky. I'm a very direct person. We were idiots at one time too, and we paid all the cash flow traders too when we were younger traders.
Mm-hmm.
We learned, you learn. Let's not do the behavior again.
Mm-hmm. Absolutely. All right, guys, that is our show here for a Monday, 11/16/2020, start the week. As always, we love coming in and doing this for our community each and every day.
Very quickly, Tim.
Team Tackle. Yeah, go right ahead.
Very, very quickly, Tim. And guys, these lessons, we give, like the one I was just giving this guy. We've paved the way. We've paved the way from all the dumb decisions we did along the way. So I promise you, we've done that a million times. Okay, we've done that. We've made the mistakes. We've thought we're better than it. We thought we were the special, unique, precious little snowflake that was just going to be better than everybody else, and how these rules were not going to apply to us because we're just better and smarter and just more talented than other individuals. No, the market is smarter than you. You need to realize that. And the sooner you realize the market is simply smarter than you are, the better trader you're going to be long term.
Mm-hmm. Absolutely. I love the advice, and I love the teaching moment there. No question about it. Guys, we're done for today. We'll be back tomorrow. We got a podcast to record. Looking forward to the conversation with Coach Tyler.
Podcast.
As always, fired up on Mondays. Put that podcast
Tim,
out, tradingjustice.com. If you're not a podcast.
I love. I had to do it 5 times because that's how much I love it. The concept of beta weighting and delta weighting portfolios. We spend so much time in our scouting report meeting, detailing exactly where to rank all of our rankings from the S&P to 30. Like it's a big deal for us to move from 40 to 35 to 30. That's a big deal, guys. Okay. So in terms of this, we put a lot of emphasis, a lot of time in the discussion of ranking these things, and why a 30 ranking is important to our community, because that informs our community where their delta number should be in relationship to their portfolio and in relationship to their market bias. Now, obviously, our job is not to tell people what their bias is in the market. Our job is to help people navigate the market. When the S&P says 30, that means you're beta weighting, you're delta weighting your portfolio to a slightly bullish delta based on what we're seeing in the marketplace. And what Tyler talked about in the newsletter for November was that very concept. And those of you who are not familiar with Tyler Craig, Tyler is one of our amazing coaches at Tackle Trading, no doubt about that. But as a writer, I love the way he writes. It's like reading a novel, and you visualize it, and just he's so creative with his analogies and his lessons. And I just felt Tyler Craig did such a beautiful and amazing job. And guys, I know there's a lot of newsletters out there. I'm going to tell you right now, the free one you get from Trading Justice is better than those. You're not only going to learn in those environments, learn lessons and get great analysis, review topics, but just the amount of work and effort that gets put into that on a monthly basis. And I just want to tell Tyler how amazing how good of a job Tyler did. Just absolutely loved it. You can go to tradingjustice.com, obviously, guys. If you go to tradingjustice.com, that is our podcast. Tackle Trading is the sponsor of our podcast. Last week, we did post-election market themes. I did a little bit of a deep dive on the psychology of themes in that podcast. Today, we're going to have the great Tyler Craig to come on and talk to us about beta weighting and delta weighting portfolios. It's an advanced topic, but it's a topic that you guys should be very, very, very familiar with. And so definitely check out the podcast later on tonight. We'll have it dropped, I would say, sometime around, it's usually around 10 p.m. Eastern, sometimes earlier, sometimes a little later, just depending on how quickly, well, let's face reality, just depending on how many words Mark and Tim want to talk. I mean, they just never shut up in the podcast. But so it will be out tonight, but definitely for your Tuesday morning navigation choices there. And if you love the podcast, guys, number one, we do get asked this question quite a bit. Number one way you can help the podcast, because we don't advertise, we don't charge for the podcast. We just put it out there for our community. The number one way is to give us a 5-star review on iTunes. That helps the metrics get the podcast out into the ears and listeners of other people out there. So appreciate all those reviews on the podcast, guys. And if you have not yet done that, I would love it this week.
Absolutely. Yeah. Always looking forward to conversation with Tyler. He did a great job. Glad that you brought that up and detailed it. I did drop a link to that newsletter in the chat. And Sky had one last question, and then we'll get out of here. Is everybody a professional trader in this group chat? And the answer, Sky, we got intermediate, beginner.
We got lots of people.
It's a community, Sky. Yeah, it's a community.
Sky, I will tell you this, Sky. Everybody's an active trader. I will say that. Professional is a subjective term, and you can decide for yourself. But I would say everybody in this chat and most people in this forum here, they're all legit traders. They've all been around the market for a very long time, and quite frankly, I come here every day to hang out with the crew and hang out with Team Tackle. And so, Sky, they're amazing people, no doubt about that.
Love it. All right, guys, we're out for today. We'll be back tomorrow, same time, same station. Until then, stay safe, stay profitable, and we'll see you guys in tomorrow's show.